Have you ever wondered how the final phase of a major development can transform a community? Welcome to the Commercial Real Estate Insights podcast. I'm your host, Steve Hamoen. Let's get right to it. The final phase of a significant retail development in Wesley Chapel is set to bring an exciting blend of national chains and local dining options to the area. According to Jennifer Thomas of the Charlotte Business Journal, this project promises to complete the retail landscape in Wesley Chapel with the introduction of Publix, renowned restaurants, and retail outlets. The development, known as Village Commons, is strategically designed to enhance the local community by offering a vibrant mix of shopping and dining experiences. The project's concluding phase will feature a signature freestanding restaurant space, complete with an outdoor patio that overlooks the village green, creating an inviting atmosphere for residents and visitors alike. This development is expected to not only boost the local economy by attracting more visitors, but also provide new opportunities for local businesses. The inclusion of national chains alongside local eateries is anticipated to draw a diverse crowd, fostering a dynamic and thriving community hub. While this development is making waves in Wesley Chapel, similar developments are also transforming other regions. In Kitchener-Waterloo, Ontario, for example, mixed-use developments are on the rise, blending residential, retail, and commercial spaces to create integrated communities. This trend mirrors the cross-border relevance of such projects, highlighting how strategic development can enhance urban living environments across North America. The Central Avenue redevelopment project in Kitchener-Waterloo has been granted a 7-year tax abatement aiming to revitalize a blighted property in the heart of the city. This initiative is poised to transform the area into a vibrant commercial hub, complete with multifamily residential units and retail spaces, offering a significant boost to the local economy. The tax abatement is expected to attract investment by reducing the financial burden on developers, thereby accelerating the project's completion and enhancing the urban landscape. The project is a collaborative effort between local authorities and private investors, seeking to leverage the strategic location of Central Avenue to create a dynamic community space. The redevelopment will feature a mix of residential, retail, and commercial components, aiming to attract a diverse range of tenants and businesses. This aligns with current trends in urban development, where mixed-use projects are increasingly favored for their ability to create integrated, sustainable communities. In a similar vein, urban redevelopment projects across the United States are also witnessing tax incentives as a tool to stimulate growth. In cities like Detroit and Cleveland, tax abatements have been instrumental in transforming underutilized properties into thriving commercial and residential areas. These projects highlight the cross-border relevance of tax policies in encouraging investment and revitalizing urban centers. As the Central Avenue project progresses, it is expected to serve as a catalyst for further development in the Kitchener-Waterloo region, potentially inspiring similar initiatives in neighboring areas such as London and Cambridge, Ontario. The success of such projects underscores the importance of collaborative efforts between public and private sectors in driving economic growth and enhancing community living standards. The acquisition of South City Mall in Kolkata by Blackstone marks a significant development in Eastern India's retail real estate sector. This transaction, valued at 3,250 crore Indian rupees, was advised solely by Anurag Group, a leading independent real estate services firm in India. Blackstone's acquisition of this prime asset underscores the mall's status as a crown jewel in East India's retail landscape. South City Mall, spanning over 1 million square feet, is a retail powerhouse featuring an array of international and Indian brands. It boasts the largest food court in this part of Kolkata, multi-storied parking for over 1,250 cars, and houses more than 150 stores. The mall generates an impressive annual turnover exceeding 1,800 crore Indian rupees, with daily footfall ranging from 55,000 to 60,000 visitors, and surging to 75,000 to 200,000 during weekends and festive seasons. Sushil Moda, chairman of Merlin Group and director of South City Projects, commended Blackstone on this acquisition, highlighting the mall's prime location and premium brand offerings. The mall includes renowned brands like Pantaloons, Zara, Shoppers Stop, Tommy Hilfiger, and many others, making it a definitive destination for shopping, dining, leisure, and entertainment in Kolkata. Sumendu Chatterjee, regional director of land at Anarock Group, expressed delight in being the sole transaction advisor for this iconic mall. He emphasized Anarock's capability in facilitating large-scale, complex deals and delivering comprehensive real estate advisory services for marquee assets. The acquisition by Blackstone is seen as a vote of confidence in Eastern India's retail ecosystem, with the transaction being led by Prakash Bachawat, director of JB Group, on behalf of South City Projects. Ashish Mota, head of real estate acquisitions in India for Blackstone, conveyed excitement about strengthening Blackstone's presence in India and investing in such an iconic asset. He acknowledged the mall as a central hub for the community, positioning it for long-term success through Blackstone's expertise in the retail sector. An East Coast investor has made a notable entrance into the Phoenix market with the acquisition of Sundance Town Center, a 200,000 square foot retail center located in Buckeye, Arizona. This marks the debut of Baltimore-based Continental Realty Corporation in the Valley, signaling a strategic expansion into the western United States. Sundance Town Center is prominently anchored by a Walmart Supercenter and Lowe's, and includes nearly 50 retailers and restaurants, making it a significant player in the local retail landscape. The acquisition by Continental Realty Corporation is part of a broader trend of East Coast firms seeking opportunities in the growing markets of the western United States. As retail centers continue to evolve to meet the changing demands of consumers, the strategic positioning of Sundance Town Center provides a robust platform for growth. The presence of major anchors like Walmart and Lowe's ensures steady foot traffic, which is crucial for attracting and sustaining a diverse mix of tenants. This move mirrors similar trends observed in the Kitchener-Waterloo region of Ontario, where retail and mixed-use developments are being strategically positioned to leverage key locations. Such developments in Canada emphasize the importance of accessibility and anchor tenants in driving foot traffic and economic growth. As regional hubs, these centers play a pivotal role in shaping the commercial landscape, drawing parallels between the Canadian and American retail markets and highlighting cross-border relevance. The trend of East Coast companies investing in Western markets like Phoenix underscores the growing attractiveness of these regions for retail and commercial real estate development. As the Phoenix market continues to expand, opportunities for multifamily, tenant leasing, and industrial developments are expected to rise, reflecting similar growth patterns seen in urban areas across North America. In a significant move to boost businesses, jobs, and commercial real estate, New York State's legislature has approved 3 tax incentives aimed at revitalizing New York City's economic landscape. The legislation, co-sponsored by State Senator Andrew Gennards and Assemblymember Grace Lee, has received overwhelming support, passing 143-4 in the Assembly and 40-19 in the Senate. This initiative, backed by the 5-Borough Jobs Campaign, seeks to address the city's affordability crisis by promoting job growth and reducing commercial vacancies. The tax incentives covered in the bill include the Relocation and Employment Assistance Program, the Relocation Assistance Credit for Employees, and the Lower Manhattan Relocation and Employment Assistance Program. These programs are designed to spur economic activity across New York City by encouraging businesses to expand and fill underutilized office spaces. The Relocation and Employment Assistance Program, originally established in 1987, has already helped numerous businesses, creating over 4,900 jobs in Brooklyn alone. The Relocation Assistance Credit for Employees is a new initiative that supplements the Relocation and Employment Assistance Program by incentivizing out-of-state businesses to occupy vacant office spaces, thereby aiding New York City's post-pandemic recovery. This program is expected to generate approximately $385 million in returns to the city. Regina Meyer, president of the Downtown Brooklyn Partnership, emphasized the importance of this legislation in keeping downtown Brooklyn and other commercial hubs at the forefront of innovation and growth. The Lower Manhattan Relocation and Employment Assistance Program aims to attract businesses to Lower Manhattan by offering financial incentives for relocating and expanding operations in the area. These programs collectively highlight the strategic use of tax incentives as a tool for urban revitalization, drawing parallels with similar initiatives seen in cities across North America, including Kitchener-Waterloo in Ontario. Such incentives are crucial in transforming underutilized spaces into vibrant commercial and residential areas, thereby enhancing urban living environments. Thank you for listening to the Commercial Real Estate Insights podcast. I'm your host, Steve Hamoen. See you on the next one.